Hello everyone, it's me, the Boss Hog, and today we'll look at my portfolio as of the week ending the 3rd of February. Honestly, it's been super nice again after a 14% rise in January. We're up another 4 and a bit percent in February to date. Definitely helped by both the Thursday going wild for everyone, I'm sure, as well as some favourable foreign exchange movements. The graph I've picked here, I think, tells a story. You know, you can look at this as sort of 3-year period, really. The first year where we start to make profit, and you can see the sort of teal color there looks great. Then 2022 happened, and we spent much of 2022 underwater. And then since sort of late last year, we've been making a real comeback, and now it's looking pretty decent. So our profit is now back to 18,000, all-time high, and we are feeling good about it. All right, so in terms of this week, the Boss Hog and his family are on holiday, so I'm actually doing this video from our cabin on the MSC Virtuosa, very large ship which is currently in Northern Europe. However, we've got a bit of time whilst we're getting things sorted in Hamburg, so I thought I'd do this video. It's going to be short and sweet though. Basically, I've just managed to free up about 15 minutes of my time before we head out. In terms of other news, just one bit to mention really, which is more or less extending what I just started on the introduction. Yeah, comfortably green for the week. Also, as well, now my UK positions are back in the black. They've spent much of the last year in the red, and that's mainly because of my 2 Russian listed exposures, exposure in 2 miners, Evraz and Polymetal. Even though they're Russian miners primarily, they are listed in London and therefore count as UK shares. But this week we are back profitable by about £80, so that feels really good. And then obviously the rest of the 18,000 is my US exposure. So, but it does feel really good to feel like I've climbed out of that hole. And actually, I feel like reacted very well over 2022. Yeah, and really, to be honest, I think I was saying a couple of weeks ago that it felt like I was having to go against the FX movements. It's definitely not been favourable over January. My expectation for the sort of pound to dollar FX rate is about 115 to 120, and it had been running at about 124. However, following some very favourable US economic data that came out, specifically with payroll data as well as manufacturing data, it basically meant that the markets priced in a much more aggressive Fed, and what that meant is that the dollar strengthened, and therefore my US positions became more valuable as a result, right? So even though Friday saw quite significant fallbacks on some of the tech, you had like Meta with their results were seen as quite positive. You know, I think Meta has been overly beaten up, frankly. It's still a cash generative machine. But then you have maybe some disappointing data from the likes of sort of Apple. I thought actually Amazon's data was kind of okay, but yeah, Apple and Google. And again, Amazon is slightly beaten up, I would say, not in the same degree as Meta, but I would say it's more beaten up than some of the other tech, like Apple. So yeah, so it was interesting because you saw sort of Friday then sort of a little bit more reality set in. But for me personally, like I benefited about 2,500 on Friday. So even though I'm up sort of 4,500 during the week, certainly a good chunk of it is thanks to FX movements as well. I didn't really see any pullback on Friday, whereas actually up very slightly on the day. All that said, let's have a dive into our portfolio now. I'm not going to be walking through the news of any of my companies this week just because I actually want a bit of holiday, but doing a weekly pulse of my portfolio is useful. So we're going to round off with that now. All right, so in terms of my consolidated overview, you can see here that my trading 212 accounts come to 136,000. My Google document consolidated just slightly under 1359. Again, I'm very happy with the delta between them at the moment. I think it's absolutely fine. We've now had enough data that we can start looking at 4 weeks. I decided to do 4 weeks and then 14 weeks to be 3 months and obviously 52 to be a year, just because a lot of my reporting, especially at this kind of level, is done by weeks. So hence I now have enough data to look at 4 weekly cycles. And you can see here, I mean, it's incredible. Like I'm up 16 grand over the last 4 weeks. So definitely, you know, a lot of my portfolio profit has happened over the last 4 weeks, which is lovely. We've done 3,000 over the last 4 weeks. I haven't done anything this week, even though I do have quite a bit in my current account at the moment. That's really just because between a holiday and my business trip in a few weeks, I needed to make sure I had sufficient money to do that. But yeah, you can see here basically our week-on-week change in terms of our unrealized position, up about £4,500. So we are feeling really good. The only sad thing is that, you know, we want it to come down a little bit so we can do some more buying in the red. In terms of how we're performing against our indexes, you know, against our benchmarks, we're doing super well and have actually pulled further ahead month to date just because I didn't have the pullback on Friday that most of basically everyone else did. And that's really because of the 50% that I hold in US stocks. So that kind of just boosted it further. And you can also see now my portfolio here, 135,907. Again, just for anyone who's new, that matches with this figure up here. All of this stuff is, all of the calculation and the logic is taken from Google Docs. And then I just use trading 212 as like a reconciliation point. And that's really what I actually have in my brokerage, right? So again, but all of the intelligence, because my brokerage is free, just doesn't have the data to do this kind of stuff. So I built it myself. This graph here is what I presented on the opening of this video, so nothing more to share really. I am really expecting this to show sort of in 10 to 20 years time. The green part's going to become smaller as a percentage as we sort of start getting tens of thousands of pounds a year in dividends. So for me, this is going to probably be the most long-term rewarding to see sort of this extend, especially this purple chunk here, which is at the moment quite modest. But we're really expecting our dividend snowball to get going over, again, the next 10 to 20 years. And likewise on this graph, you can just about see it, maybe the profit over time. This blue line is now back above. You can see it here, £82. We are now back in the black on our UK position. And then we're at all-time high profit now, which feels really good. We're now back ahead of where we were before the war started, which is what this huge drop is here. And again, this is my Russian exposure, which is unfortunate, but we are recovering. In terms of stock movements, again, you can see here, I think this kind of tells its own story. A lot of the year-on-year change here is still pretty red, and that's because it's looking at a period before the war started, right? What I think is going to happen is in about 3 weeks' time, this is going to start turning to green because of that comparison. However, look at some of these. I mean, this only shows if it's more than 5%, so you can see here, like quarter on quarter, a lot of this is very green, right? So been very good. Month to date here, so basically February is also looking pretty good. And likewise our week to date, which is quite similar but not quite the same for month to date at the moment. Some interesting movements. I mean, Allianz is really, this is an ETF that I would describe as my big tech ETF. And to see an ETF on Thursday move like 7% was incredible. I don't really expect ETFs to move in that kind of way. But again, there was a lot of hype and it managed to hold on to most of its gains. Whereas obviously, single stocks fell back a reasonable amount. Even like Google though and Apple here, these aren't bad increases, right? Even after the pullbacks, that feels really good. Dot Digital here, this is a very small holding of mine, really like less than 0.5%, but they published what I would say were another set of reassuring results. This is a very small emailing company that uses sort of intelligence and CRM integration to do customized messaging. I've worked with several of these kind of solutions before. They're very powerful from a kind of customer engagement perspective, both from increasing sales and reducing propensity to call and contact more generally. So that they continue to produce pleasing results. If I'm honest, I think I slightly overpaid for these, and I'm basically flat at the moment. I have a 114 buy price. I think a fair price for these, especially when I bought them a year ago, would have been something like 85 to 90. So I've been bag holding a little bit. I think it was just a mistake I made by slightly overpaying in a public, a good market as it was at the time. However, I still like the company in the long term. It's profitable, even though it's a small a penny stock. So we are just going to hold it and enjoy the ride, basically. I do expect this to turn profitable soon. Huntsman here, this is my main industrial play. It's a very exciting advanced chemistry company, but they're plus 7% primarily on China reopening hopes. Then we've got all of our ETFs here just moving in the right direction. Meta obviously had a great, this isn't a huge holding for me. Again, this is about 0.5%, right? But it was really good. And I'm still quite red on these, by the way. I'm still sort of down about 15%, but a lot less red than I was. Microsoft, Polymetal's been all over the place following some worries about delisting or kind of losing their primary listing to London and then moving to Kazakhstan. We'll see how this shakes out. I've basically decided to ride or die with both my Everaz position, which is unlisted, right? That's why it's not applicable at the moment. We'll see if that ever returns. And Polymetal similar. As I've increased my portfolio value, these have become less important. But you can still see here, like, got 1,200 in Poly and another 800 or 750 in Everaz. So it's not immaterial. And that's my current value anyway. And then just to round it off, again, we've got Scottish Mortgage here. This is like, if Alliance is my big tech exposure, Scottish Mortgage is my small tech exposure. Very volatile, still very red year on year. I'm just very slightly red on these at the moment. I've got an 832 average, which I think is a really sweet average, honestly. I would actually like to buy a few more shares in this maybe under £10. I think I will be increasing my exposure to it in the medium term. Yeah, so I'm fine, but I would actually like it to go back under 8. That would be good. And then T row here, which is kind of our multiplicative holding. It kind of exaggerates the wider economy because of its very nature, I suppose. So to see it be plus 10%, plus 11% week on week feels pretty good. I still really like T row. I thought they put out a bunch of okay numbers, and by that I mean they were pretty bad. But the expectation was even worse. So even though their assets under management and things like that are showing reductions, as you'd expect, there is some optimism. They're still incredibly well capitalized, and I feel very comfortable about my holding here for the long term. I'm actually now back in the green on T row as well by about 5%. So that again, to me, like when T row turns green for me, I've kind of got a buy price that tells me that the economy is starting to stabilize and recover. So yeah, that's my general feeling. So yeah, overall here again, the 135907, this matches with our overall Google Docs, as you'd expect. Really, not. I don't want to spend too much time on anything else, mainly because I want to go and enjoy my holiday. But also here, there hasn't been a ton of moves. The big change is really my tech segment, which continues to grow off the back of technology doing very well, as you'd kind of expect. I haven't added anything, but tech has outperformed, and so we see this. No dividends received this week. I actually have quite a good dividend month in February, but my two very big ones are being received on the 24th. So right toward the end, I'm expecting something like close to 400 for my dividends for February, but we have to wait for most of the month to receive them, so we'll see how that goes. And then yeah, just a bunch of other stuff here. So I don't really have much else to add. This is just a very quick update from me, really. My shortest video for a little while, so hopefully you all stuck with me. Yeah, this is my dashboard now. I do plan over February to explain a few things like how I construct this. Quite a few people have asked me now. I think I must be up to about 10 people who have asked me to either explain how I do all of this or part of it. So I will start maybe doing that, and hopefully you guys will get some value from it. Otherwise, I may or may not get to your comments for another week. We'll see how the holiday goes. But otherwise, thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.